Hello, I'm Chris Brown, Fleet Group Editor at Bobbit, and welcome to the next episode of Fast Forward interview series. In this episode, I interview Ann Brodette of Mitsubishi HC Capital America. We discuss the current volatility in the financial sector, including inflation, high interest rates, and bank failures, and what this could mean for fleets. Well, Ann, welcome to this edition of Fast Forward video series.
Thank you. Thanks, Chris, for having us.
Yeah, for sure. Okay, first tell us about Mitsubishi HC Capital America. It's a bit of a mouthful. You guys just went through a merger?
We did April 1, just a couple of weeks ago. So we merged 3 different Mitsubishi companies, including Eng's Commercial Finance, into one.
Wow, great. Okay, well, I guess I'm talking to the right person about this subject matter, right? Let's just get into a lot of turmoil in the financial sector in the past 8 months. I mean, obviously, we've all been dealing with inflation, then certainly high interest rates, and most recently, these bank failures. Let's kind of get at what this really means for fleets. So serve up opening thoughts.
Yeah, so it's crazy time right now. Very exciting, but very crazy. So we already see high interest rates, and unfortunately, those are going to be around for a while. But what's really with the bank failures, what is happening now is banks are going to be much more risk adverse. So there's going to be less money out there to lend, especially in a riskier industry like transportation. So if you have, let's say, credit lines with banks, you normally go to your regular bank to get loans, leases. It might be a little bit less. They might not be willing to take as much exposure in your company as they have previously. Bloomberg report just came out yesterday, and it is the largest U.S. bank slump in 2 weeks ever on record. $105 billion declined in money out there to lend in just 2 weeks. So wow. It's big.
Okay, so the market's restricted. So the amount of money that has been would have been lended has restricted by 1.5 billion.
Exactly. So less money out there, there's less supply. So you are going to see some higher interest rates. With them contracting, banks are going to want to try and preserve their capital. And it depends on the type of lending institutions. So some of the banks are going to try and keep some more capital on hand, which was one of the reasons why the other bank got into some trouble. They did some more riskier investments and things. So we're going to see banks that don't want to lend to some of the riskier areas right now. Regional banks, that's a tough one for regional banks. So if you're used to going to your local bank to get a loan on your trucks and your fleet, maybe your regional bank that you got your mortgage with, they're great, but potentially they're stepping out, at least temporarily, out of the market. Some of them, we'll see some of them go by the wayside, that they're just not going to want to invest in transportation at the moment. We're hearing all kinds of buzz in the industry. Even a lot of those regional banks are looking to get rid of their transportation portfolio. So not only are they not getting new loans, they're trying to get rid of what's already on their books right now. So you're going to see some tightening there. And then the other area, we've got a lot of independent lenders out there, some that came in the market when it was really great a couple years ago, and they gave out all kinds of loans, good interest rates, but their credit standards weren't that great. They were kind of lax. So we're going to see them dropping out as well. So you're going to have less lenders and less money in the market right now. So that can, really impact the fleets out there right now.
Well, sure. I mean, I suppose there's a portion of our viewers that would be, hey, I've been working with my bank for 20 years, great credit, never a default on anything. I'm probably not going to have to worry or be, touched by all these other issues. What do you say to that?
Well, good for you for having great credit. So that's fantastic. We wish everybody was like that. You probably will still be just fine. So, reassuring you're going to be fine, but there could be some little hiccups coming for you that you might not be aware of. Number one, with less money out there, your bank might be restricted that they can only have a certain amount in transportation. So they might not be likely to, even though you've been a great customer, if maybe you, they don't blink an eye if you have to take out $2 million to replace some of your trucks normally. Now they might come back to you and say, you know what, we're sorry you paid great, but unfortunately we're restricted a little bit, so we feel comfortable with $1 million or 1.2 or some, so it might be lower. The interest rates might also be higher. So in order to qualify for a super A rate or, a really good credit A, they're tightening their boxes. So if you got that rate by having 100 trucks, you might have to have 250 trucks to qualify for that rate. So you may see some of that as well. So it just depends, you're in a good position because you've paid well. There are other lenders that would probably welcome you with open arms, but that goes into talking about trying to diversify your lenders a little bit and not putting all your eggs in one basket.
Right. Okay. I mean, and you mentioned the regional banks too. I mean, I'm sure that there's, fleets that have, let's just say a construction or sales and service fleet. They've got 150 units. They've been working with a regional bank. And what you're saying is that these banks are essentially getting out of the transportation business. Whether you're a good customer or not, that might leave these fleets on the sidelines.
Yeah. And that's just a possibility. Okay. Not that it's going to happen, not that it's happening to every bank, but more likely than not, they're going to start looking at their riskier business that they have on their books. And if it happens to be transportation, they may be backing off that a little bit or getting out of it entirely. It's who's to say what's going to happen, but just be aware that, some of that might be happening. So even though you didn't have your bank in Silicon Valley Bank, it doesn't matter. It will affect you in some way.
What's your crystal ball or Mitsubishi's HC Capital's crystal ball in terms of what the Fed might do? Any thoughts there?
Yeah. So we're pretty certain that we'll probably have one more hike, maybe 1/4 of a point beginning in May. And then we really feel like the Fed is going to put a pause on any more interest rate hikes, at least for a while. They pretty much tell you what they're going to do. Everything that they said they might do, they pretty much done throughout this year about raising interest rates. That's where everybody feels like it's going to be one more, then they're going to hit the pause button. Because of the instability of what happened with Silicon Bank and Signature, there's a lot of instability and they need confidence in the banking market. And if they keep raising as fast as they were, that's not going to happen. So we feel pretty confident it's going to cool off for a little bit, but there are a few wild cards out there. So one would be, I think you and I talked about it, is the debt ceiling. So, DC right now is, it's just dysfunction about what's going to happen with the feds and what they're going to do about the debt ceiling. So until that stabilizes and there's a resolution for that, you're still going to see some instability. You're going to see maybe a pause on business growth a little bit and investment while people are waiting to see what's going to happen there. So again, just some more, things that might affect interest rates out there and the amount that people are willing to loan to the transportation industry.
I mean, are we seeing an easing in inflation? Is that moderating this?
Yes, actually the rate of inflation growth, it is coming down. So it's not as strong, but it's still there. It's just not rising as much as it was. And of course, they're trying to avoid that recession that may be coming as well. So crystal ball, who knows, but we're definitely in just a crazy economic conditions right now.
Really great thoughts and action. And for fleets, anything to leave us on things that fleets should think about doing?
Yeah, so I would say a couple more strategies possibly is to have a little bit more cash on hand. So conserve your cash. Right now, profits are not great, right? You had record profits in 21, not as much profit now, so you might not have as much cash on hand. We've got higher gas prices coming up, higher equipment costs, lower spot rates. So there's some things, some headwinds. Hopefully spot rates are stabilizing now, but it's a good idea. So think about, could you pay, if something were to happen to your bank, your local bank, could you pay your payroll? Some things that might, you just want to make sure that you have a little bit more cash. You could get that by extending your term loan. So if you're getting some new loans or leases, if you normally get a 36, 48 term loan, you might want to extend to 60 or 72 months. So your payments are lower each month, so you have a little bit more cash on hand, maybe for some of those extra expenses. And then just keep in mind, there are, I don't want to say a lot, but there are many more loans that are defaulting right now. So some of those, even big fleets we've seen just out of the blue, some of these trucks have only been used a couple months and they are defaulting. So if you have some cash on hand, think about, is this a good time? Could I go in and scoop up some of those repos or, auctions or whatever, have some cash on hand? And also, how can I capitalize on, somebody else's loss? How can I get those customers and what can I do for that? So I just put a few more of those things in the back of your mind.
Wow, that's great. Well, Ann, thanks for the perspective, and thanks for the learnings that fleets should take and run with in these trying financial times. Really appreciate it, though. Thanks for joining us on Fast Forward.
Thank you.